We are live.
Okay. So I have turned on the recorder. The time is now 9:33 a.m. I am going to call the continued budget workshop of the Venetian Community Development District to order. Today is June 4th, 2026, Thursday. I am going to call the roll of those who are present. On behalf of district management is myself, Belinda Blandon. We do have field manager Keith Livermore present. On behalf of the supervisors, we do have Joe Pizarro, Cheryl Tarana, Cindy Sneezik, Rich Goodman, Ken Smaha is with us via Teams. And on behalf of Hampton Golf, we have Carol McGrail with us via Teams, and Jamie Selby is present.
Do you need a motion for Ken to participate?
No, it's a workshop.
Okay, all right, fair enough.
Thank you.
All right, and we do have, for the record, one audience member present. All right. So supervisors, I'm not sure, I did send to everybody, a revised worksheet last night.
Yes.
The consolidated worksheet, did include the assessment schedules. After today, I will be able to update the actual year-to-date numbers with the April financials so that we can, put together a final budget package so that we can make some photocopies for Monday's meeting for distribution to the audience members. I figured you probably want to start with the River Club, so I'm not sure how you want to get started.
Might as well, that's fine with me, if it's fine with you all. Let's do it. We have Carol on, right?
You have Carol on?
Great.
Yes, good morning.
Morning, Carol. All righty. So does Carol and Jamie, does one of you want to take us through? How would you like to do
I'll do that,
this?
yeah.
Okay,
I'm
great.
getting loaded up here, making sure got the right files. Now, I'm gonna work from the Excel worksheet that we've been utilizing. And then we'll just run through the changes, all of which were the comments from the last meeting. And so does everybody have this version?
I think so.
I think so, yeah.
All right.
Electronic.
Okay, the notes from the last meeting, all kinds of little things, so I'll just run through those just so everybody understands the moves. Materially, they didn't amount to much because we had some reductions in expenses that offset some of the moves and changes. But just running through the list, the notes from, I guess it was the 22nd. We had a food runner that was originally coded to the back of house. We moved that to the front of house. We added expense line items for uniforms and food and beverage, added $350 per month, which should cover a Centos contract if that's the direction that the new GM wants to go. We did allocate utility expenses across the departments. We then did not do anything with regard to fitness and charging for classes. We were going to wait further direction on that. Okay.
Don't you all agree with that, yeah?
Yes.
I don't.
You don't, okay.
I do not. I've looked at this 7 ways to Sunday, and I am still of the belief that at a minimum, we should recoup $30,000 from these fitness instructors, these classes. I believe that long-standing programs still need to be assessed and looked at on an annual basis. So we have received a lot of don't charge for classes, blah, 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 this and that. On the flip side, I have received just as many, it's about time we start charging for fitness classes. So what I did was, I said to myself, what's the fair thing to do? And we need to be consistent across our optional services. This is an optional service, this is not an amenity, okay? It is one place that we have the opportunity to say, we need to start charging for these classes. And let me just give you an example. We're a government entity, right? Well, when I grew up in the northwest suburbs of Chicago, we had something called the Park District. My parents and their taxes paid for the amenities. They paid for pools, they paid for the tennis courts, they paid for the softball fields, all the recreational facilities. We could use those facilities for free. If my mom wanted to take an aerobics class, she had to pay because it was an optional service. We should be applying that same rule here. And if we're not going to charge for the fitness classes, then we need to apply that rule consistently across within the River Club facility. And we need to be consistent. Now, the other thing that I did, and this is the reason why I'm recommending $30,000 be added to the revenue budget. I'll share that with everybody. Can you hand that down? Take it, hand it down. So what I did was I said to myself, I did some calculations. And I counted all of our classes. Yep, one more, there you go. The capacity per class, the number of spaces, okay? And you can see the total capacity per week at 100% is 684 spaces available, okay? I assumed not all classes are gonna be full, so I assumed a 70% capacity, all right? The total spaces for 50 weeks worth of classes is almost 24,000 spaces available, okay? Even if, I don't know what we want to charge, but let's just say we charged $1 a class, and I'm not saying that's what we're gonna do, okay? Just want to be clear with that. We can recoup $24,000 and eliminate $45 out of everybody's assessment. Okay, if we recoup the entire amount, the entire fitness instructor cost, we can eliminate $45 of cost per household in our assessment, okay? And I think that is something that we need to consider because that is substantial. And the impact to the 150 or so residents that are taking the classes is minimal because we're eliminating the $45 right out of the box for them. So, right?
Per roof.
Per roof.
Right.
Per roof. So my opinion is that I would like $30,000 worth of revenue for fitness classes and give me the benefit to be able to work with the Fitness Pool Advisory Committee to come up with a solution on how we recoup that. And then I can come and we can open up the rules and regulations and establish the rate at which we want to do this, whether it's a monthly fee, a per class fee, a combination of the two, whatever. But I think at some level, we need to be consistent about our classes. They're either all free or we're all paying for them.
Just for the record, help me with the math.
Sure.
You want to decrease by $30,000 and that will be $45 per house?
No, the $45 per household would be recouped if we recoup the entire fitness instructor cost.
Of 75
Of the,
or the 55?
it's 62. It's like 62,000, I think.
And I'm,
62,000 divided by 1,300.
okay.
Does that make sense?
Yeah.
Did I do my math correctly?
Yeah, I was doing the other, I thought you said the 30,000. I was like,
No,
I'm
I
not getting
misspoke.
that math. Okay.
Yeah. So ideally, if we could recoup the entire amount, I mean, I would love to do that, but I think that's aggressive for this budget season. I'd be happy to recoup half of it at the 30,000.
So I guess my question would be, and I don't disagree with you, and I apologize for getting in front of you because it's your area and I should have just kept my yap shut, but, before. But, because it's the trim budget, is it safer to leave it now?
No, I would like to add the 30,000 in now, since it is the trim budget, and then sit down with Fitness and Pool Advisory and say, okay, we can get more.
Yeah, but
Right.
But if we come up, if it doesn't work out, we're already 30,000 behind the 8 ball.
What if your people take, I have a number of questions, and
Okay,
for me, I think we need to stick something in the sand, but this discussion is, I think, a longer discussion. because
absolutely.
I have lots of questions, like, I am still getting mixed messages about what happened when this complex first opened. Did they charge for classes or didn't they? And I've got basically half the people telling me, no, they did not, and the other half telling me, yes, they did. I don't know the answer, and I would like to know the answer.
I don't know why the history would matter, but okay.
But it matters to me because when this place opened, okay, I'm married to someone who was here when this place opened. And I am continually reminded of what WCI promised.
Yeah,
And what has, I no.
We also had the, prime rib night at $7 because it was marketing
Yeah.
subsidized,
But
so.
that wasn't something was promised, but I'm just saying, like, they promised tennis as an amenity. Did they promise fitness as an amenity and fitness classes? That's all I'm trying to figure out.
Yeah, but I don't see why that matters. I didn't buy my house from WCI, I bought it from the Bells. So maybe they promised the Bells that, but they didn't promise me that. I don't see how a promise from WCI carries over.
Maybe promise was the wrong word. How was this community established?
Well, this
and how
building
was it
wasn't even owned by the
advertised?
community when it was built, we didn't own this building.
Correct.
So the
But
whole
when
premise
we
of,
move
the whole
into the
premise of what,
community-
the whole premise of what WCI said
It's
is
just
irrelevant,
one
because this
point.
building wasn't ours.
Okay, that was one point of several that I had.
Okay.
Secondly, I'm sorry to get off on that, but I think it plays into where I fall out on this, is what
Okay.
I'm telling you. Second item is, I think that how we charge for this is a huge issue. And that I think needs more
I
planning,
agree with that.
because there's no way you're gonna charge somebody $2 to $5 a class and try and monitor that without adding staff even to keep track of it.
There are some mechanisms in Jonas, I mentioned that in the last meeting. I guess what I am asking is that you guys give me the benefit of the doubt and we add at least 30,000 in there for us to be successful with recouping this.
Yeah, and I'm with Jill on the fact that on a trim budget, 30,000 reduction is, I'm not comfortable, because if we can't do it, what if we do this and nobody takes classes?
Could we
I don't
cut,
think
the-
that's gonna happen.
Well, then we
Could we
get rid of all
cut
the
the-
instructors and save all the money.
could we cut
Exactly,
the
but-
difference of 15?
Yeah, I am more comfortable with that, and then come up with a plan before budget.
If you give me the 15 and I am good with that, I will take the 15 added into the revenue line for the budget.
On the flip side of that, which I know some people get, we have tennis leagues that are using our courts.
Yeah, so,
Exactly.
all right,
I
so,
mean, if an internal, a resident league, I
That was
have
gonna
no
be
issue
my-
with.
I had more points, but I'll stop now. That was one of them.
Yeah.
So I still see there's not
Inconsistencies.
consistency.
I
in
agree.
seeing
You're
how we
absolutely
apply this.
right.
And that's where I struggle responding to people. I'm like, oh, it's got many tentacles. And I want to make sure we're being fair to everybody. I know.
and I agree with that, and I'm not saying that like, we won't be looking at that for the next budget season. This is, to me, this is our first opportunity to start to equalize and create a policy that is consistent across the River Club here with what we have for
I
classes. and
appreciate you
things.
doing it too.
And so, like I said, we're charging for chefs' cooking classes. That's a class.
Not
That's
charging
that's
for
an optional
washing.
service.
Or you're getting
Not
food,
charging for
But
or
you're
you're
getting
getting food.
I think
But
that's
it's still
different.
different. Okay, but regardless, I'm okay if you guys are willing to add $15,000 into revenue.
And the caveat for me is, this decision will be made before the budget cycle hits. But it doesn't necessarily, it depends upon what we all decide. It could be that we're gonna decrease the contract service by 15,000.
It might be that.
I want to have that discussion, a longer discussion.
I agree.
Okay,
Because I looked at the thing that you sent out, actually I went online, I saw a lot of classes
Yes,
have 6, 7
Two,
people in
three.
them.
Yeah.
Right.
And it's consistently, a lot of the same classes have
one or two people.
underperforming.
right.
It's private
So there's
classes.
many
And
ways to skin this cat.
is there a
Yes.
limit, is there a limit of how many classes you can take a week
Not
Not in the summer.
That was longer
in
than.
season?
In the season, yes, 4. So
Because,
let's add 50.
because that's not gonna happen, Cindy, if somebody taking 3 classes in a day.
Okay, it's qualified. I'll tell you that in a second. Let's add 15,000 to the revenue line, and that ultimately could end up being a reduction in the expense for classes. That is because they don't count outdoor classes in their 4-class limit. It's an
Oh,
indoor class limit only.
Got it, okay.
Okay, all right, thank
That's a
you.
good qualifier.
Because that one's even harder, because you could be in the pool, trying to swim over.
Hop on over.
Anyway,
Okay, thank you.
And finally, thank you for doing this.
yes, thank you, Cindy.
Ken, did you have a comment?
I did. I think it is a longer discussion, and to me, we're either charging to cover the entire cost of the instructors, or we're not charging. Since this is a trim budget and worthy of a much longer discussion, I think we should table it, not put it in this budget yet. Maybe, and decide before the final budget, because I think if we add revenue in the final budget, Belinda, doesn't that count as a reduction, not an increase?
I disagree with that, Ken. I want it recognized.
Well, I had a
I agree,
question
but
for
can I,
Belinda.
Belinda, do you know
He
the answer
does
to
have
that?
a point. You have to increase the expenditure because if not, what's gonna happen is you're gonna decrease your assessment amount.
That's right. That's the problem.
I still would like it in there, because I want to decrease that. That assessment amount right now is substantial.
But you do have to increase the expense. If not, it's gonna decrease your assessment amount.
Okay,
Or you just cut some classes, you cut in some classes and you say, one or the other.
I'd rather show it as the revenue.
But I think that's gonna be a problem when we get to the budget. So if you just show as expense, you can still do it the other way.
I can still do it the other way,
Yeah.
so a reduction in expense, can I still
Longer
add the revenue line?
Even if you add a revenue line item, you have to have an expense for it, because what's gonna happen is, if you just have a revenue line item, you're just decreasing your overall assessment.
Understood, that's
So,
the goal.
yeah.
Because I don't think it's fair that each household get hit for this $45 per household.
but do you wanna do that right now, Cindy? That's the question.
And let me make a point.
Here's my feedback, and I want you to take this into consideration, because I went through this.
Okay,
I went through this a lot, and I can tell you that I went through this with an entire room of people, meaning out the door. So there was a lot of people in that room, and I took public comment from so many people. And there was a lot of back and forth on this issue. I think that as a board, you still need to have extensive discussion that I don't think you can have here. You can't make a decision here, you're just, working on your budget. I
okay,
think you need to realize that you still have to make a decision, which you can do Monday, because Monday you're gonna approve your proposed budget overall.
okay,
Now you're working on your budget, but overall, you still have time after you approve your trim budget, because this is not your final budget, this is just your proposed. So you don't wanna limit yourself to making a decision and reducing this, and then a vote is taken and not everybody agrees with what you've proposed.
okay,
Do you understand what I'm trying to say?
sure.
So give us a deadline then. When is
Yes.
the final? I can't remember. When is the final?
Okay, so, let me go into some dates.
Isn't it July somewhere?
The hearing's in August, isn't
Typically, we do it in August.
Oh, yeah.
Yeah,
it?
so our final public hearing would be in August. Let me look at the date.
So what's Mondays then?
Monday's just your proposed.
We have
So
to have a proposal.
You have to have a proposed budget
Okay,
approved by
okay.
June 15th. This is your not to exceed
Sure,
amount, because once
understood.
you approve your not to exceed, you can't
Uh-huh.
reduce it.
Okay,
Meaning
understood, yeah.
You cannot increase it, sorry.
You can't increase it, you can't
You
make
can
it more.
You can reduce it as you go along, working on your budget towards your final public hearing.
Okay,
Up until the date of your public hearing, meaning on the date of that meeting, you can still make changes to your budget on the
Okay.
exact date,
okay,
meaning reductions can still be made, but you can't have any increases because your budget has already been submitted to the county, everything has already been done.
so then I could come back at that point and say, I want to recoup the whole 60,000, I have a
At
solution
any
for
point,
that.
we can have this conversation ongoing until August.
Okay.
So I
Okay.
agree, we need to just leave it the way it
And-
is.
Yeah,
And speaking of all this conversation and some of the comments that we've all gotten, I would suggest we send an email out to the community explaining these deadlines. And the reason that we're having all of these conversations today is based, and not when people leave, is a state
I
mandated,
know.
it's a state mandated process that we are not in control of.
They,
a lot of, there's a lot of misconceptions that are gonna be taken out of this workshop or any conversation that you have from here until your final public hearing.
But I
Okay,
think
What
people,
I would suggest, if you want additional data, I can go back and take a look at some of the old records that we have based off of some old public hearings and old meetings where people gave some comment and there was some feedback, and I can go back and check to see old information. I remember that, this was when God rest his soul, but Rick McCafferty was on the board, so there was a lot of information that was given back and forth. David Lusty was on the board. There was a lot of information that was, exchanged between board members. Jerry was on the board. There was a lot of, documentation. So I can go back and see what sort of documentation was exchanged. There was conversations about originally when WCI was on board. So I don't recall the exact information, but I can take some time and go back to old records and send you some stuff so that you can see exactly what was discussed. And I know that the fitness committee back then was also involved.
That was me.
my only take is that we have got to start leveling the playing field.
Sure.
And stay consistent with our
It's
policies.
a great point.
because-
Thank you.
And
I just think we aren't now, and so that's why it's a broader
and because
discussion.
as many people that buy a house because of the amenity of a class, there are that many people that may not buy a house because of the excessive costs of the fees.
right, exactly,
So,
exactly.
and we'll never know who those people are because they never bought here.
That's why it's a longer discussion.
Yeah, and especially because if you look at the percentage increase for, that's proposed in the River Club trim budget, it's an opportunity to be able to say, and if we do X, it has this impact. So save your fire.
You want me to save my fire?
I'd rather start high and, yeah.
Okay,
Yeah.
all right, I am good with that, as
But I
long as we
think-
don't lose sight of
But
this
I think we
conversation.
should send
Yeah,
out some
because
kind of letter to the community expressing the dates and why we're doing it now versus in January when everybody's here. We don't do it in January because we're not discussing budgets.
I'm happy to put something together and work with Keith and, we can,
I
I think people, are getting pretty good at reading your blast, so,
If we keep it short and sweet, and
That's-
and the reason we're doing it now is because
Okay.
we're doing it now is because this is budget season mandated by the state.
Sure.
Not because
I
we're
take
waiting,
your point.
not because we're waiting for people to leave and
I'll put
sneaking it in.
Right.
I'll put something together, Rich.
And then,
Yeah.
what I will also do in the meantime is I will reach out to TTA for Jonas for billing options on this, so I can bring to the board what exactly are the options that we have available to us to be able to bill without excessive addition to headcount to do it.
Cool.
So I'm gonna send Carrie a note, Cindy, because Carrie's great at this, because I'm pretty sure she remembers.
Okay,
And, I'm pretty sure she'll be able to track a lot of this stuff, and we'll put something together for you so that you can go back and just, see some of the historical on this, so that you can read through a lot of the information and
Right.
documentation.
right.
I don't think that, you should limit yourself with reducing the line item right now,
Okay,
because what if at, the public hearing, the board decides, well, no, this is not the action that we wanna take.
okay,
And then you already made the reduction, so how are you gonna recoup those funds when you already made the reduction?
got it. All right, and I will, like I said, I'll come in with the Jonas information. I've already gone through it, but if we need to, I can do the step-by-step instructions to show that it is not a burden to the staff. It wouldn't be excessive.
I'll try to pull out my presentation, I think it was January of 2021 or around there, spring of 2021, when I made the proposal to the board to remove the fee because it
Yeah.
wasn't being fairly applied.
And that is it. It needs to be consistently applied along with everything else within the community.
Yeah.
That is my ground
100%.
zero for this.
100%.
Okay,
It's
Long
like,
discussion.
because I know like we charge for pickleball and, part of it was was the buffet at the end, but no buffet here is $55, whatever we charge, so
What
we
do you
charge.
mean by
Bocce.
that?
We
I'm
charge
sorry,
for
bocce,
pickleball?
the
sorry.
bocce league.
yeah,
We
we
charge $50-something for the
charge
bocce league,
for the bocce league.
even though, and a barbecue is $30, so you still pay $20, at least $20, and you were forced to have a
Yeah,
barbecue.
we'll cover
So,
that.
so
Yes.
those are the types of things that
Yeah.
need to be even there.
Fair enough. Thanks.
Okay,
So, as long
So
as,
just about 5 years ago, we did vote to charge a fee, and attendance at the classes drop dramatically,
Well,
somewhat in protest, mostly in protest.
Well, that would be fine, Ken. Then we would take a look at the class sizes and then the instructors. I mean, that's something that would have to be addressed. I mean, unfortunately, that would be a situation where if we went that route, it would be unfortunate for the people that are taking the classes. To me, if their health isn't worth $2 a class, how can we justify that households pay $45 for it if they don't believe that it's worth $2? Yeah,
This is
so-
gonna take, this is a
I'm
whole,
sorry, I'm
no,
done.
this is a whole 4-hour workshop.
Yeah,
Yeah.
go.
We'll have that conversation.
So,
Yeah,
okay,
thanks,
so-
thank you.
So I'm not changing anything.
That would be
Not
right.
changing it right now.
That was
20 minutes at my number.
Good job.
And I'm happy to be a part of any further discussions as you kind of
Yeah, we appreciate your insight on this.
my
too.
question, my issue is the F&B staff. I sent out an email yesterday to you guys, and Jamie, showing showing what the staffing levels were like last season.
Rich,
And
do
how
you
many-
guys wanna go in order? so
I
that
think,
you guys
I would like to
can
just
explain?
let Jamie
Oh, I'm
continue
sorry.
to go
Okay,
through this.
okay, all right.
Yeah, that way you
okay.
guys can go a little
Got
bit
it,
faster.
okay, sure, no problem.
Sorry, not my workshop,
No,
but I
no
wanted
issue,
to.
no issue.
That'd be great. So what I'll do, I'll finish going through kind of the summary notes, then
Yeah.
I'll jump into the impact
Sure.
per department. This'll take 15 minutes, I
Sure.
think,
Yeah, okay.
with questions.
On the clock.
So, the other adjustments, the board requested that we increase repairs and equipment down at aquatics to $21,000. That change was made. I think I'd expressed that Keith was being tracked in admin when almost all of his function is more food and beverage related, so he got moved out of admin into food and beverage. Survey expense, I don't think I was carrying this. You indicated that you wanted to keep doing them manually, but that we would take it over with Hampton Golf, so there's no need for a
Correct.
$7,500 expense there.
Yes.
Ashley Larson in our corporate office, I do have her looking into the phone system just to figure out, well, in addition to Jonas Encore, IT services. Can you step over that? Sorry. Just to make sure we don't have redundancies. So she's gonna take a look at that, but the Alliance drop was already taken care of, so that change has been reflected in this new budget file. Let's see. There was comments about adding money for a bottle filler water fountain and $2,000 for touchpad screens. The below the line, line items were kind of undetermined in the last meeting. I did increase October's budget of non-recurring to $6,000 to cover $4,000 for a bottle filler and $2,000 for the iPads. But because I don't really know what the intention of that line is, I just left the year-end balance at $30,000. So again, all I've done there is whatever was carried on the prior budget, I repeated to this budget. So if that needs to change, just leave it.
2,000 for the bottle filler alone costs at
$4,000 for the bottle filler,
4,000
$2,000 for the.
Oh,
Yeah.
okay.
Yeah.
So 6,000 all in.
Got it, okay.
Then increased pest control with Nature Zone, that's all been done. Increased building and repairs. I did reach out to current insurance agent. He doesn't suspect there being any increase, but that'll all depend on who the insurance moves to, what carriers, et cetera. In fact, I think you could see a decrease. I'm seeing that in recent contacts to discuss insurance items at my club. But I've just left it status quo, so what the expense is, it's built in for this year, so there should be a windfall there, unless it's a bad hurricane season. Let's see, capital reserve, I did not touch. And the only thing that I think was still open was the interest payment or interest income. I was tracking 1375. I'm not sure that we got an answer. Carol, if you can hear me, were you able to get any more detail on what that interest income amount should be?
No, I really don't know, I guess historically how that has flown. I think we have like 16.5 in the budget for next year.
We do, and so that, you know, with our current trend, it's tough to really assess, because we know there was issues there, and then we're getting a lump payment. When you look at historical and you look at budget, you can see that 16.5 appears low. So I don't know if there's a desire to want to increase that, we just don't have the basis to understand what it should increase to. But if you're okay leaving that at 16.5, it's a below the line item anyways. That's pretty much all of the notes that were taken from the last budget cycle. So the big change that occurred here, the $2,000 reduction in expense from Alliance that mitigated a lot of the little add this, add that. Then the allocation of expenses, utilities, gas, et cetera, that's what really shifted expense lines. So just jumping right into food and beverage, it pretty much remains almost entirely unchanged, except for what was determined to be the percent allocation of utilities and gas to hit that department. Now, you know, looking at historical, we don't see that level of expense posted there. So that might be a further discussion item as to what's right, and maybe this is the new baseline and we build from here. But when you look at historical data, it's hit or miss at best, posting food and beverage. The overwhelming majority of your utility expense here is in a sense, a direct correlation to the food and beverage function, but it is also open regardless of whether you have food and beverage function. So you could go either way on how it's allocated. We followed the allocation percentages that Greg had, but that constitutes about a $53,000 increase in expense to the food and beverage P&L, which is a direct reduction to admin. And then the only other significant change is in fitness. That was previously a loss of 86,477, and another roughly 52,000 added to that department in allocated utility and water expense.
Yeah, Jamie, is that where that was meant to go? The utility, electric, gas, water, and sewer, was that supposed to go to fitness or aquatics?
Ken, I saw your message. I believe that meant to go to aquatics.
Yeah.
So just miscommunication on allocating it. Department 300 was noted as fitness, but actually fitness is 310 or 315, something like that. Anyway, that was an oversight on our part.
Yeah, that won't change the total. And you decided to go a third.
It is fuel and oil, which is basically gas. Gas, we split 3/4 to F&B and 1/4 to aquatics. Electric and water are both a third to F&B, aquatics, and admin.
Okay, well, I think the numbers come out exactly the same in each department. 35,000 for electric, gas, and 18 for water and sewer. In each of the three departments.
Carol, do you want to just maybe run through the allocations again, if we have, you know, a break for you, and just recalculate and see if there should be moves? I think overall, there would be no net impact because of that, but we'll make sure that we get the split correct. I apologize so that does not change fitness then at all. Fitness should remain, well, not remain, it will go up, but obviously a much smaller increase than what's reflected here.
Yeah.
Aquatics would, again, increase accordingly, but the net overall, admin takes the reduction, and then it's spread across food and beverage, aquatics and fitness. Aside from those changes, you know, we did have incremental expense. It was not significant. In the modeling I did, I had to put in, I carried a 3.5% assessment increase previously. Had to increase that to 3.8% to offset the incremental expenses that we discussed last week. And that's what gets us to the above the line NOI of basically a flatline budget, I think negative $111. And then I know there was discussion about, well, bottom line, is not flat, but
Right.
nor was the prior year budget. So this is where, you know, I would need guidance from this group as to what to do to make, because if I increase anything top line, obviously our NOI is gonna be positive 100 to offset the bottom line, non-recurring in capital.
Belinda, why would it be that the bottom line would have the negative and not be zero?
It should be zero.
It should be zero. But according to the budget for this year, it shows that it's 76.
Which one are we looking at?
I'm looking at Jamie's spreadsheet.
I'm not looking at that one. I don't have a
Okay.
copy of that.
Okay.
But he should
Yeah,
have
it
zero.
It should
be zero.
it should be
You should
zero, so-
offsetting it in the tax assessment line.
Yeah.
So this theoretically should be built in then to the River Club assessment number. Okay.
Carol, can you pull up the original,
And I don't know if.
I
Budget.
think Vanessa does that,
Vanessa does that? Okay,
but.
that was my
You shouldn't
question.
have to. This should be zero, and it should be offset in the tax assessment line.
Okay,
Well, yeah, and I put in the capital reserve, I put into Belinda's worksheet, I did put in, everything below the line.
okay,
So that's all included because we have like the 16.5 of interest, and then the cap reserve and non-recurring is on Belinda's worksheet as well. And Belinda, if you have the email that I sent you, if you want it right now, when I sent you the worksheet, the second tab is this consolidated everyone's looking at.
Yeah, so on the, I compared Carol's numbers to what, I actually took her numbers and I entered them into ours,
Okay.
and it zeroed out.
it's zeroed out.
Yeah.
Okay, perfect. All right,
good.
thank you.
So what you have in the,
Okay.
in the consolidated, meaning with all of the worksheets.
Sure.
With the assessment schedule,
Zero's out.
there's zero.
So the consolidated one that you had put together represents that 88,000, so we don't have any more that we need to account for.
Not
Okay.
that I'm aware of.
Okay, cool, thank
Okay,
you. That's
so
what I
we
just
are-
wanted, I
we are
didn't
balanced
understand it.
then.
Okay,
We are good? Okay.
No, I think in Hampton's spreadsheets, they should zero it out.
I agree with
Yeah, I
that.
agree with that too.
I mean, using the
Ken.
numbers that were in the spreadsheet that Hampton gave me as the consolidated, meaning what they typed into our worksheet, I took all of those numbers and put them into ours,
Mhm.
and it was zero.
It's zeroed out.
So how did you,
That's-
so what did you do, so if you took their numbers and put them into your thing, how did you get zero when they have minus 89?
Revenues and expenses.
I can answer that. It's because of when you enter the numbers into Belinda's worksheet, because I did the same, it automatically changes the tax
That's right.
assessment number on her worksheet to
Yeah.
be what it needs to be to zero out.
I
In
see.
our worksheet, I left Jamie's original projection of the tax assessment.
Perfect, okay,
I worked
understood.
it all.
What happens is
Got
at the top, meaning a line number, I wanna say line number 5, that line automatically adjusts based off of the revenue lines that you have
Mhm.
from, going from line number 9 down.
And Carol, it should, you shouldn't be budgeting to the loss. You should be managing to
Correct.
zero.
Yeah, I assumed once this workshop was held that we would increase that on our worksheet, line 124, the tax assessment. I assumed we would change that, but I didn't want to make that assumption before the meeting and change it. So we would just insert Belinda's number instead of the 1,953,000, we put her number in.
So I have a question on the capital reserve. What happens if we take out that 75,000?
Are you asking that of me, Ken?
I think so. I think I'm asking.
that would be-
Linda.
It would decrease our bottom line by 13, take the loss to 13 versus 88 on our worksheet.
Yeah.
But I kind of had the same question, Ken, because I know we budgeted it this current fiscal year, but yet we can't allocate any expense to it. So
Well, we
is
have-
it, okay, I thought we couldn't because we're moving it to the balance. If it's really a capital expenditure, are we moving it to the balance sheet and getting reimbursed for any payments from Belinda's office or no?
The answer is, if it's a capital project, yes, except it doesn't, the question is, how is it funded from the capital reserve? And so the question is really for Belinda.
Okay,
As to why
okay, so going back, the capital reserves were originally funded from the general fund line item and the River Club line item that is in your financial statements, which is, what's it called again? Hold on. I don't want to call it contingency, but you never had a capital reserve previously.
I thought it was from carryover, Belinda.
No, well, it's carryover, but based off of, what is this line item? It's all the way at the bottom. Hold
Is
on.
it non-recurring?
Non-recurring, thank you very much.
You're welcome.
So the non-recurring expenses, the idea originally came from Jerry Jasper, where utilizing non-recurring funds at year end, the capital reserves were established. So this line item added to the River Club budget last year, I believe was your idea, Ken, because the capital reserve was running low on funds.
Right. 2 years ago.
Mhm,
I was looking to replenish the capital reserve.
correct.
Right.
And it's always been that way, meaning every year you would review whether or not you did have surplus of funds, meaning prior year funds to transfer into the capital reserves, then they would be transferred into the capital reserve. But since the past last year you had to amend your River Club budget because you ran over. So I don't believe that there was a transfer last year into a capital reserve. You don't have to have it, but you need to keep in mind that what is your balance in your capital reserve right now for the River Club? Hold on.
67.
Yeah, that's all you have there.
Yeah. So if we built bocce courts, for example,
You could fund it from there,
from where?
from the capital reserve.
Yeah.
If you fund it. If you don't fund it, then you have to find an alternative method to fund it.
Okay, and the way of funding it is through the operating expense?
Not necessarily.
Departmental expense?
Not necessarily. You can choose and vote to utilize reserve funds if need be, but you would have to do it via vote. Remember,
Okay.
reserves are not required and they're also not restricted for government entities.
Do you recall what we did with funding the pickleball courts?
They were in the River Club budget.
Mhm.
They were not
Operating
operating expense, they were not
Yeah.
part of the reserve.
Okay, so that's consistent.
Well,
And what if
Sabina
we
was right.
don't, what if we don't spend the 75 this year? It just
Carries over.
Well,
reduces the loss?
it does, it carries over, Ken, but right now, I think you're operating at are you operating at a loss?
Yeah, I don't think we're gonna have.
Yes, not for this year, but I think
Does
for
it?
next year. But can you go back to what you said before, which I didn't quite follow, which is non-recurring was put in there to fund capital, so if there was a remainder, it went
It
into?
was not. You
Oh.
had a non-recurring line item,
Uh-huh.
so that if, for example, you had an expenditure that was outside of the norm, meaning you needed funds for a project or something that, wasn't a budgeted line item, it would be coded to non-reoccurring on both the general fund and the River Club budget. Non-reoccurring was used a lot for the River Club for
Tiki bar.
tiki bar, not tiki bar, but there was a lot of things that were outside of budget. And non-reoccurring was used, but a lot of times they didn't utilize all of the funds that were in that line item. So the idea came, okay, non-reoccurring funds, if we are under budget, we'll move them over to the capital reserve.
So why do we have two lines now? I think that's where I'm,
Well, you have because you have the general fund and you have the River Club fund. Remember, the River Club fund is an enterprise fund, then you have your general fund.
right, but I'm looking at the River Club tab. So in River Club, we have non-recurring and capital reserve. If we put it all in non-recurring,
Because you still need a non-reoccurring line item in the event of that River Club reserve was created, the capital reserve was created specifically to just fund the capital reserve. So they have the non-reoccurring in the event of, if there's something that they need an additional expense line item for that is outside of their budget,
So,
that's why it was left there.
so like the bottle filler, it's not really a capital item, it's a non-recurring expense that we're updating in the facility, is it kind of
Could
like
be a
that?
capital, could be a capital depending on,
Okay,
you
so it
know,
could be capital or not capital,
correct.
okay.
See, I think that's where I always get confused, is in a government accounting. Reserves aren't required nor necessary, you could do everything out of operating.
Mhm.
We choose to do reserves because it makes more sense to us.
Right.
To some of us. It
To
makes a
some
lot
of
more
us.
sense. But then I get confused when we do this kind of stuff, and I'm like, so essentially, it doesn't really matter where we spend it from.
This is the only district where I actually have a capital reserve and a reserve.
That's
The
why I'm
majority of
wondering
the
why we're
districts
doing
have
this.
a general fund account
Mhm.
and a reserve account. So this is the only one where,
So why do we have that?
That's what I'm trying to get to, is why did we complicate? I feel like we
Yeah,
complicated
we have,
this.
we have all these, we
Well,
have all these, we have money in all these different funds, and it's hard to understand exactly how much pile of cash we have sitting.
See, to me, this is clear.
I agree with Cindy. I think,
Clear to me.
I mean, originally, when the initial discussion was held, I reminded the board, and Joe can attest to this, that you have to take into consideration that you need to fund the first 2 to 3 months of your new
Mhm.
fiscal year.
Right, right.
Because you don't have tax funds coming in at the start of your new fiscal year. So you have to take that into consideration, you know, when you're planning. So that was one of the conversations that we did have, but the board decided to move funds into a capital reserve, and they were established.
Well, Jerry wanted to separate replacement versus new.
I agree with Jerry on that.
I do agree with Jerry on that.
That was the concept.
Yep,
I'm a business owner, I just need to know how much cash I have available. I don't care where I classify it, I need to know what I have to use, where I wanna use it, when I wanna use it, if I can use it. Not, I've gotten 14 different places and I have to figure out, okay, so now I've got this project, so I'm gonna move it from these 3 funds to this fund to make sure I have enough in that fund to do the work I wanna do.
Except for the rules that we've established, you could use any of it.
Yeah.
So we're really trying to take government accounting and make it work in our private accounting world, in our non-government accounting world, and that's why we keep complicating it with this kind of stuff. So,
Yeah,
my opinion, yeah. So the question is, do we need to keep it or not? Could we?
So at year end for fiscal year 2025, the capital reserve balance was $57,000. So this is why it was included as part of your River Club budget, and that was to fund the additional amount so that you had for whatever was new coming on board for the new.
Because our rules say it has to be new to come out of capital.
The obvious question for us would be, let's say we need to replace a $20,000 AC unit, we don't have any funds. How's that gonna be funded?
That's
reserves.
That's reserves.
Then let's say it's an $8,000 cooler in the kitchen.
Reserve.
Is
Anything that's a replacement is a
Okay,
reserve,
so
anything
then
new is
what
capital.
are the parameters?
it comes kind of to what Cindy just said. Anything that's new is capital, anything that's a replacement is reserves.
Yeah, I don't know why there was 57,000 balance there, because it should have been applied to either the entire Jonas project or the pizza oven.
Yeah.
Yeah.
I think we leave the 75,000 there in capital reserve. If, again, like we talked about, if this is the trim budget,
Yeah, we can leave it for now. It just-
Yeah.
I think we leave it for now, but I also think it's also very helpful for us to build our capital reserve for future needs.
completely
Oh,
agree.
I agree with you.
Yeah,
I definitely agree with you do that, I just don't think it should be in the operating budget of the River Club.
Well, so let's.
well, it has to be though.
Because it
It's
goes to
gonna
River
be
Club.
expended.
Yeah.
So
Okay.
I'm trying not to think about where it is, because it doesn't exist, it's really more
Just
the
the
question.
way
It's a
we
quantum reserve.
are reserves.
Mhm.
This is just another way of funding the reserve, isn't it?
Yes,
It really
exactly,
is.
exactly. Yeah, I think we should, I agree with Cindy, I think let's just leave it and go high and figure it out.
Yes.
Yeah, I mean, nothing wrong with
And-
rebuilding the
and- and-
stash.
Potato,
Oh,
potato.
definitely needs,
Yeah.
there's no question about that.
Yep, all right,
I'm in full agreement there, just where does it,
tomato, tomato.
Balance sheet or expense. Yeah, no, I know.
Yeah.
But we have, because it's an enterprise fund, it has to be expense. That's what I took away from Belinda. Is that correct? No?
Belinda's giddy, it's not even 11 o'clock yet. Okay.
you're having too
Linda,
much
can
fun
I ask
over
a
there.
question?
Sure. If you're gonna
My
confuse me,
understanding, sorry that I'm not still grasping this 100%. My understanding was that we cannot record any asset on the balance sheet of the river cover Venetian. Is that correct?
oh gosh, Carol, that's a Vanessa question, not a Belinda question. That's outside
So
my
if
purview.
if we keep this reserve account on there, 75,000, and then we fund the reserve, is that considered an expense? So I'm gonna credit my cash and debit the expense account here. Is that the intention of this account?
You
It
need to,
ends up in the due to new from account on the balance sheet.
correct. On that part, yeah.
Then,
You don't
then where
carry-
does it,
You don't
where do
carry
we ever
that.
use the capital reserve? How would I ever code anything to the capital reserve if every asset that I purchase?
Ultimately, you don't.
Just transfer towards the balance
Ultimately,
sheet.
Vanessa puts it in the capital reserve when she refunds you to clear the due from.
Correct, so you would pay it out of the River Club fund, and obviously you would have to have a CapEx form for it, and it would have to be signed off and submitted, and then she would reimburse. the
If we
River
have-
Club
Okay, that I
fund for it.
understand and that we have been doing, and that's why I'm confused when I would ever, like, this is gonna be 75,000 budget and 0 expense for the year, because I would never code anything to this account.
But is
You
the
would
seven-
not, it would show, she would show it on the consolidated.
Okay, but on mine, am I correct, on my books, I will never charge anything against this $75,000 line?
What about a repair of a capital item? Well, let's say we replace a compressor at $20,000 ECU for
Reserves,
$5,000.
reserves.
Reserves.
But I thought repair was one, replacement was another. So I'm not replacing the whole unit.
Oh, you're.
Let's say the unit's 5 years old, should last 15. I can repair it for 3 or spend 20 for a new one. We repair
That would
for
be
3.
repairs.
But would that not hit this 75,000? Oh, then I'm with Carol. I don't
Okay.
understand.
For me-
But that's okay, I'll
But
figure
then
it
on
out
top
later.
of that, Jamie, I don't understand.
Maybe non-recurring?
Yeah, so
What's the
if
point
I'm-
of
if I'm-
non-recurring then?
If I'm spent, what's the capital limit? If I'm spending 3,000 and buying it, replacing a unit, and that unit's gonna last several years, then why would that not be capital?
It's reserved.
Just because that's your methodology, doesn't matter if it really is an asset that's gonna last 5 years. If it's a replacement, it's called reserve, and it's not an asset on the balance sheet, correct?
It's an asset on the balance sheet, but not the River Club balance sheet.
Correct, it's on the consolidated as a fixed asset.
Okay, so then I'm back again to when would I ever code anything to the 75, and why is it on our financial?
You won't.
It has to be for the assessment.
You won't, the only time you would code something to this is when the transfer is done. So once the transfer is moved, meaning the funds are moved over to Dana, that's the only transaction you should have.
Carol, it being on our P&L is a function of getting the assessment at the right level to zero out this budget. So it basically is a reserves bank builder is what it sounds like.
To me,
Right, so it goes back to my question, if we were to fund the reserve account 10,000, taking 10,000 out of the River Club's operating account, I would expense it, the 10,000 going out to this capital reserve, correct?
I think we're getting too technical here, and I don't have Vanessa with me here, and I would prefer to have our staff accountant here for that.
I feel like we do this every year when we're doing budget.
Yeah,
Uh-huh.
yeah, we're getting very technical here, and that's not a question I
Yeah.
can answer.
well, let's leave it for now, and before we finalize the budget.
Yeah,
We should
because you
memorialize
do,
it
we
somewhere.
do reflect fixed, typically when there's a large project and you need the funds for a large project, you would submit a check request if it's a reserve item, and then Jill would initiate the transfer from Dana,
Right.
and it's sent over to your bank account so that you guys have the funds for it.
Right.
So, you know, there's a process involved. Vanessa then moves ahead and she does do to, do from, and you notice everything on the balance sheet on how everything is coded here. I just don't know what the internal transactions are because that's out of my purview. But I would prefer that you guys have that discussion with her because I think it's getting a little too technical here. And we're moving a little bit into financial transactions that I can't answer.
Carol, why don't you and I and Vanessa have a call?
Thank you.
Let me message her since I have her here on Teams now.
But we'll leave it for now, and we can always take it out in the final budget. Because I think it belongs as part of the reserve funding, not operating expense.
Okay, I'm sending her a message.
I think that's a wrap on the detailed changes from the prior meeting. What else do we need to go through departmentally or otherwise?
Okay. My comments on the F&B labor, as I was talking about before, covers and items in season are down about 15 to 20%. We've got labor up dramatically this year to next year, which is a jump up from the year prior. I sent everybody a copy of actual payroll records from 2025 when Vesta was here in season for front of house, back of house, dramatically less staffing than we have now. I mean, if you look at what was presented to us from Greg, in off season, we have, on a Wednesday, we have 85 front of house hours, 85 hours for front of house on a Wednesday, off season, plus a concierge in addition, plus a food and beverage manager in addition. We're open 9 hours at most. We have very few people actually eating past 8, much less 9. I went back and looked at all of the chits. So the way that Jonas works is when the chits closed is when the hours kick in. So out of all of our sales, a couple $1,000 for the entire season was done after 8 o'clock and a couple hundred after 9. So basically we shut down at 8. Maybe people hang around, wait staff has to clean up. It's 8:30. We've got people working to 10 o'clock at night. We've got people coming in for F&B starting at 10 o'clock in the morning, just to try to make hours to give everybody some sense of a stable income, working 28, 24, 30 hours a week. He's got the concierge working 2 hours a day.
I think what you have to remember, Rich, though, is that not every F&B hour is gonna be attributed to a sale. We have our F&B people who are doing a lot of setup and breakdown for non-F&B activities. So maybe you're asking a fair question about
I understand.
how are we,
I understand a lot of that,
yeah.
but we don't need, 85 hours. That's 10 people plus a concierge and an F&B manager. And we have 2 maintenance staff people. We have 2 maintenance people. That's, in an off season. So we have people working 24 hours a week. You can't make a living at 24 hours a week. If we've got Keith here at 2 hours at night. I don't know if Keith wants that. I haven't spoken to Keith. I have no idea, but I'm assuming it's going to cost him
Is here
more.
more than 2 hours?
That's all that's budgeted.
That's all his budget. It's
That's
2
all
hours,
budgeted.
5 to 7 o'clock, 5 days
But
a
he
week.
I think he's appearing somewhere else in the income
He
statement.
might be,
I-
he might be.
I don't know.
Because he's also doing pool attendant work.
Right.
Okay.
So let
So-
me say this.
But I'm just looking at it
Sure,
that if you
fair
went back
point.
and looked at what we did last year and
Remember last year, we still had some banquets, we had
so
banquet stuff going.
that would have increased F&B labor, not decreased it. We're down 20% in terms of the number of, with 16% down in season, the number of actual items sold.
Yeah, I
And
don't
we're
think,
down-
but what does that mean? Is that like an order of french fries, or maybe somebody just didn't order french fries? I
No,
think
but, okay,
you can make the argument.
but there are
that-
21% fewer covers. That means you have 21% fewer people coming.
No, I wouldn't get too hung up on covers. That could be so many
I
different
agree.
reasons. I'd get hung up on the revenue.
Yeah,
But
that's
the revenue
right,
variance
right.
is 2%.
Yeah, but we've raised prices, so you're selling more expensive stuff.
So many
That's
things can
true.
influence the cover. If I book your table under, and this happened, we know this was happening. If I book your table of 6 under you, if I don't split that shit properly in the system, it's gonna be 1 cover, not 6. So there's so many factors that could influence that. I think the real, now, Rich, I see your point though. If revenue was proportionately off, so 22% down in covers, if revenue was also 15%
But we
down.
replaced Fish Friday, which had 130 people, with Fish Night, which had 40 people. Revenue is the same, but you have 100 less people, so we're down in covers dramatically. If you look at the chips, you can see it. I mean, I went through it. I'm telling you, this is,
Well, to me, it's not just revenues, it's also about bottom line. I mean, you can get people in here and sell, a million hamburgers for $9, but what's your bottom line?
but I'm saying, but if you're down chips, if you're down covers and you're down items, that means your staff has got to cook less food and serve less food because there's less and there's less chips. And what you said, your comment was that 6 people on the thing is a chip, not a cover. So the covers are down, not the chips.
They have to key that in the right way to account for the 6.
So so everybody's now doing it wrong and so.
No, I'm not making that
So
joke.
then what's your recommendation? What do
I'm
you
just
think we should
saying-
do?
We've got to look at reducing overall staff, especially during off-season, to give the existing staff that we keep a workable wage, work 30, 40 hours, work 35, 40 hours a week, not 24 or 20, so they can make a living, and then supplement with more part-time people, which is what we used to have. We used to have a lot of part-time people working, which we don't have part-times anymore. Everybody's now full-time.
That's not true. We have part-time people.
Well, we used to have part-time people working like 4 hours a week, like previously.
I think that's a business decision. I think we can,
Well, I understand it's a business decision, but when I'm looking at a budget and I'm spending all of this money on labor, and then I've got 9 people working in the kitchen when I used to have 4, that's double the amount of people. I just don't see how we can justify, and where's the savings on the burden? We've lost all that too. So not only did we increase payroll, all the money we're supposed to save on the burden is now gone, plus increased payroll. And when the average payroll is great, and the expensive payroll, but you gotta realize every time you put a person on, there's also a 15% burden on top of that, because that's what it actually costs. So having extra people around and then paying benefits on top of that, payroll taxes and so, FICA and all, it just increases these costs. And that's why the
Why do you
subsidy
say
keeps
the
going
burden
up.
benefit is gone? You look at food and beverage.
Well, no, it's the bottom line, but I'm saying, it's in the bottom line, it's not gone, but I'm saying, but we had a 30% burden that we were expecting a 15% burden, so we should have saved 50%. So we're not saving 50% anymore, that savings is now going into payroll. So we've increased payroll to compensate for the burden savings. So we're moving people around, and there's just too many moving parts here. I think if there's too many people, and you can't put that many people into the kitchen at one time.
it's not everybody in there at once, Rich.
Yeah,
I think
it's not.
what you have to remember.
I'm looking at the hours, Joe. Mostly it is. I'm looking at the hours. I've done it. I'm looking at the hours.
Which file are you referring to?
And then we have one person making pizza. On average, we sell 4 pizzas a day off
But you
season.
have to understand, Wilson, he does other things.
But
But it has to get categorized somehow.
But then it should just be a chef, not a pizza person. And if he's off on Wednesday, there's nobody making pizza. So other people making pizza. So why can't we just have other people making pizza? So if he's,
We do.
so
But
if
you
he's
know
doing,
what, if you call them all the same thing anyway, you're still gonna be concerned about the numbers, so I
I'm
wouldn't
still
get wrapped
concerned
up
about the
with
numbers.
titles.
Right,
We have
I
one,
agree.
2, 3,
And what you
4,
don't take
5,
into consideration
6,
is all the
7.
cleaning, all the
Right.
work that has to
Prep
be done in
work.
the coolers.
I understand,
The
All of
inventories.
but we
Yeah,
did,
unpacking,
okay, but that's why I sent last year's payroll. That work was done last year with a lot less people.
Really, you
But-
think it was done well? See, I think we're kind of gonna mix apples and oranges here because we can't compare to a company that we didn't think was doing a good job and say, why can't you meet the same numbers they were doing?
I'm not saying they were doing a good job completely, but it was also not as bad as you think, you know.
So,
The only
Some
comment-
slight additions, yes, but but we have now, on Wednesday, we have 1, 2, 3, 4, 5, 6, 7, 8 people, seven plus chef. We have 8 people working on Wednesday, and they start working at 12 o'clock. We don't serve lunch. We have 2 people working here for lunch. I don't need 8 people making hamburgers starting at 5:30 at night when we sell $200 for lunch. That's my concern.
I just think,
I'm just not.
Jamie, question for Jamie, really. I'm looking at, there's very little fluctuation in seasonality in food and beverage wages. So food and beverage, it looks like the budget is up about 15% from last year. Is that,
that I think is the
does
real
that
question.
make sense?
Yeah.
That's the real question. Usually we have a decrease in salaries and wages in the summer for
How much,
seasonality.
Jamie, how much is, of that do you think is, pay rate? 3%, 4%, 5%?
We have too many people.
Not even 3% maybe. The biggest jump, when looking at a year over year, is gonna be October, November. In food and beverage, we lost the entire staff. So those are the notes I pointed out to the right of the spreadsheet. On 10/25, total payroll for back of house was 32. Let's see, front of house was 16,000. So front of house took the big hit. About half of what it typically is.
And with all that lost staff, we had no revenue loss. Actually, we had revenue gain from the year prior.
Yeah, so that's surprising.
So,
It's a loss
Yeah.
leader, as we know.
Yeah,
The more money you make in food and beverage, generally the more money you
Keep
lose.
it-
no, not money. We sold more food.
No, I get it.
During the transition,
To
when-
run food and beverage the right way, regardless what tier club you're trying to be, typically your staff inputs, your COGS inputs, all of your expenses will outweigh your revenue. Unfortunately, that's kind of a fact of life in clubs like this.
I think the other thing that you need to consider, Rich, is the fact that we had the quick contractors last year.
Not that much. 2 years ago, we had a lot.
Was
Last year,
it
we did
2
not.
years ago?
Last year, we did not have a lot. We had very
It was
little
like
last year.
about
Last year was very,
15,000.
it was under control. It was under control last year, especially off season. There's virtually none.
So,
And we have contract labor in this year, there's contract labor in here, in this budget as well. So,
Okay, so I have an idea. I think that what we should do is approve this as the trim budget. I would
Thank you very
rather
much.
start here and then we can
Well,
have
no,
a set, but I would like to clarify, let me finish, what we want when we look at, so what we'd like in the future, after we approve this trim budget, is what is the staffing plan from Hampton Golf side? Is it to keep how many core staff throughout the summer? What's the seasonality fluctuation? And then maybe we can make some adjustments, but we need a better understanding of what the proposal is to
Yeah.
staff the
So
schools.
every club is different. I can give you a model that, look, it might be accurate, it might not be accurate. We base our staffing, we base our budgets on what the expectations of the club and the membership is. So when we talk about outlets and hours of operation, it's all the driver for our budget. We don't sit here and say, well, the standard for this lunch service on Tuesday is 1 hostess and 3 servers. I might do that at different clubs, but this is largely driven by the historical, data that we have, the input we're getting, which, to be transparent, has been a little like this as to what is our direction of service and experience here. And based on all that, we staff accordingly. Rich, I would agree. I think we've hit moments where Brian's well aware. I think he got heavily staffed in the kitchen. He was hiring folks, and we ramped up and then came back down. I think Greg did the same thing in front of us, because I think our drive was, let's elevate what we have. And what we had was not good.
That would be my expectation, Jamie.
Sure.
Is I would have anticipated a spike in payroll, and then you come back in right size. And I would see that right sizing happening in this upcoming year at that point. I fully expected our payroll to go up, because we didn't know what we needed and wanted, right? And we want to have we want to be able to staff our people as full-time as possible. We want to keep that staff, we want to maintain that staff. That's how they service us so well. But I think what I would like to see, along with what Cheryl has said, is I would like to see in Jill a plan on where that right sizing model is. Now, do you feel like what you've done in this initial budget here that you presented is that right size for us?
Annually, yes.
Okay,
Month to month, I have no idea.
okay. So the big nut
I-
itself is correct.
Yeah, to be clear, I don't even know that I clearly understand what we want open and when. So I
That's
think,
the critical
That's the
question.
yeah, I think we've talked about
Yes.
what to change and what to reduce.
Yes.
And now I've been a little on the outer perimeter of those discussions, but what I've heard, seen is, I'm not sure we know what we want. So
Okay.
for us to build that model, we need the guidance.
You need
right?
us.
Yeah, to an extent, right? And so if you don't want, remember, I think 2 meetings ago, we talked about, should we be doing lunch service in the summer on certain days? And I attached that analysis of all the sales and everything to show that we have absolutely underperforming periods and days.
Yeah.
But then it seemed like the tone of where we might be going with that changed, and we were no longer looking at removing hours of service. So I think from our standpoint, it's never ideal, Rich. It's never even close to ideal. Hold on. It's never even close to ideal because you can't find people who are willing to work 6 hours a week, 9 hours a
Right.
week, 18 hours a week.
Right.
So you will always have this fluff. It's unfortunate, but it is food and beverage. It's just the way it works. And part of that fluff is driven by the hours of operation and then the expectation of service of members and residents. So it's this big conglomerate of stuff that makes the ideal calculations come nowhere close to working. So I can give you a schedule that says we're gonna run this and this and this. It doesn't necessarily equate because it depends on when the covers arrive, what time they're dining, overlapping shifts, overlapping services. It's a bit of a complicated mess.
So let me ask you something, I'm sorry.
That's
Jill.
okay, go ahead.
So knowing that our baseline is we want to keep our full-time staff full-time, can we back into a level of service?
100%. So
Well, yeah,
yeah.
I just want to add one more thing on top of that, which is we can really use your expertise coming back and saying to us, kind of to Rich's point, I understand where you're coming from,
Yeah.
that, what should we be doing? You know,
Right.
because we
Right.
have a lot of
Sure.
people here, I'm just gonna say this, and I know Ken's gonna agree with me. We have a lot of people here, we're not easy sometimes. You have a lot of people who think this is the Ritz-Carlton, and we should be open everywhere all the time.
Right.
And if, what we could really use is data to say, you know what, maybe all we really should be doing for dinners in the off-season is, a Tiki Plus menu.
Mhm.
Maybe that's what we should be doing. We do have to keep the core, and there is gonna be some fluff, but to
Yeah.
Rich's, I get it, so.
And I understand the need of prepping and doing all that, but we have 8 wait staff people between 2 and 5:30 sitting around getting paid because we have to give them hours. We're open on Saturday, because we talked about closing Saturday night during off season, but we couldn't, because I was cutting people's hours down because we have too many people. So maybe we need to cut
But
down a person or
it's
two.
not cutting down because we have too many people. The conversation was, it was not allowing our core to be full-time.
Correct.
That's the
So,
problem.
so we're seeing the same thing. So if we reduce our number of full-time staff, this way in off-season, our full-time staff gets full hours, gets paid well, they stay, they're happy, they're making a living, and then we figure out how do we ramp up in season, like everybody else here does. We find, if it's a contract person here or there, we had contract people, Jamie, that worked here so often, people thought they were full-time employees.
Sure.
And then we're here 2-3 times a week. Do we need that to that level? No, but if you have to do that for 3 months or 4 months, or for Wednesday and Friday nights when we have big events, let's think about adding, and I know they cost more, but you're adding, your cost is incrementally more, or some people may want to work overtime. So it becomes kind of the same difference. But this way, we're getting our core staff working, and we're not trying to keep 14 people employed in off-season when we're doing $35,000 a month in revenue.
So let me give you the long, short answer. This budget, I believe, is slightly inflated, slightly. Because we had a spike in hiring, and that spike was justified. We had gaps, we had needs, we had good people coming in, and I think Greg and even Brian were jumping at the opportunity to hire those folks, right? And then we lost a number of those new hires. So I think this is slightly inflated over what we need. To your question, comment, Cindy, backing in 100%, what we now need to do is, because again, 2 budget cycles ago, I thought we were gonna look at operation and say, slash that, eliminate that, condense. And yes, there are definitely days where if I was your business consultant, I would say you shouldn't be open on this day and this time in this outlet. But this isn't just business. This is experience and expectation.
Correct.
Just like your classes, they expect to be able to come in this building that they pay for and own and get a table and get service when we offer it, and even when we don't. That's the key, right? Now, we have to balance that opinion or expectation with the proper managerial response to it. But anyways, long story short, as I look at the schedule that you sent out, Rich, look, I'm sure there's unnecessary overlap in here. I think that needs to be a determining, the new GM, F&B team.
So that's, but we need to look at these things, because obviously these things hit the budget. And the other comment I have is we have 1, maybe 2 servers working. Runners working. And as we know, the Tiki Bar is where most of the sales happen in the summertime. And if you have 1 runner working the dining room, then you have 1 runner working the Tiki. We have all these waiters and no runners. We used to have a lot more runners than waiters, because the waiters would take the order and the runners would bring the food. Now we've got all this wait staff and nobody to bring the food out. So I just want these things.
It looks like we have enough runner coverage, but
Yeah, I don't think that's the case.
I think you need, my personal opinion is, I think especially in the interest of time, and I don't mean in any way to diminish, because labor's our number one figure, and we should look at it, but what I'd like to do, especially considering what Jamie said, is if we can go with a trim number here and then continue, and actually by the time we get to August, we'll have more view on how people are using it.
I'm all for the trim number.
Okay.
I'm bringing it up
Fair
now.
enough.
I'm bringing it up now because obviously if I don't bring it up, it's never gonna get reviewed. If I don't bring it up, you guys can't think about it. If I don't bring it up, it's never gonna get addressed, and then it's gonna be too late, and then we're gonna memorialize these numbers, and we're gonna go, whoops, I'm trying to, we're not the Ritz-Carlton, we're not the Waffle House. We've got to figure out, we've got to come up with a competent
More
level.
people think we're the Ritz-Carlton.
But we need to have a competent level of service, recognizing the fact that there are going to be some nights where we're going to get bombarded, and we have to figure out how to handle it with contract labor.
We don't have to figure that out.
Well,
That's my point.
Yeah.
My point is, we are all thinking about this. It's not just you. We think about it in different ways, however.
Yes,
And what
absolutely.
I want is Hampton, as our management
Yes.
company,
Yes.
to tell us
Experts.
what makes the most sense for us.
Yes.
Correct.
Give us the
When
hard
should
truth.
we be
We're
open?
ready.
how should we be staffed?
Yes,
That's what, because that's what we've never gotten, and so what happens is, we do these cockamamie things like say, and I'm part of this, I'm not saying, well, we don't have enough lunch people, and let's just close inside for lunch, which absolutely did not make sense, because you have to have people here for the tiki bar anyway. So, we only know what we know, and we really need you to guide us and tell us what, you know a little bit now about what we want.
Sure, yeah.
Right?
We have
Tell us
survey
what the
data
best-
as well.
And
Yeah,
details.
yes.
Yeah, yeah,
Good point, Ken.
What-
We have survey
Those
data.
those of us who are
We have
up
survey
there
data.
quite a bit, dinners,
yeah.
Yes,
you know, you can see the staff at times are overwhelmed,
yes.
and we don't have enough.
Right.
And other times, it's not as crowded.
Well, they will always be overwhelmed, at least until we implement some standard of reservation adherence. It's just never gonna improve. If-
Very good point.
If people can make reservations for 6 to 7:30, but they all show up and
At
dine
6,
at the same time.
Correct.
There's no way to change
I
that other
agree,
than
fair enough.
this group of people and the person that's in the G
I
and J.
Well, I'm okay with that, but we need to understand better how often that happens, what the issue is, and what do you recommend? What do you do in other clubs? Do you say, if this is the time and you are more than a half hour late, we can't see you?
It's communication.
Or if
You
you're
know,
half an hour early, don't expect to be seated.
yeah, and
Yes.
the time to do it is now. You
Yeah.
want to implement all of your,
Right.
Yeah.
and this is not because no one can protest it. It's just because it's easier to get that message out, it's easier to make those changes,
Uh-huh.
and then people get accustomed to those changes. It's not a
Yes.
punch in the face change, it is very gradual, it's communication, it's explaining the reasons why. At my club, we have the same problem. I continue to say, you need to make a reservation for all of these reasons. We cannot improve our ticket times, we cannot elevate our service levels if you're all coming at the same time and 30, 40, 50% of our covers are walk-ins. And then that was followed by communications that if you do not have a reservation, you may not get service. We will seek you, we will get you a drink, but we will not compromise the experience of everybody else who follow the rules
Who made a
for
reservation?
people who walk in. Now, this is your club and you deserve the right to walk in and say, let's go to the club tonight, but it cannot compromise the operation, the team, and the members. So that worked very, very well, but it took time. And that's what we'll have to do here. So when you see the staff is overwhelmed, that doesn't necessarily mean that there was poor management, it wasn't structured staff right. It just means that people order when they want to order, and it's very hard to influence that in any other direction. But I do think.
Exactly, Ken, they're hospitality people, but I know Belinda's looking at the clock going.
Yes.
"Oh,
No, actually, I was gonna ask, does anybody need a break? Should we take like a 10-minute break?
I-
Yeah, or 5?
Too much water, caffeine,
Sure, is that
everything,
okay?
getting me.
I mean,
Why not?
I just took a break because I needed it, but.
Yes, please.
Okay, just
Sure,
one.
so why- We're back.
Okay, so let me just announce, we're back on the record at 11:11 a.m. All right, we're back on the record.
Okay, well, I think where we've left things is that budget is good. Our next task, which hopefully can align with the new GM coming on board, would be to really deeply evaluate the operations, what changes should be made. And I think there's one important thing to, for everybody that does watch these videos to remember is that, I mean, when you change operation, when you reduce hours, when from a business perspective, you should. It's not just about cutting the loss. It really is about staffing. I mean, there is a model that works for staffing and a model that won't work. So if we're staffing extra people because we have outlets open when maybe they shouldn't be open, those people are not going to get tips. They're not going to make enough money. And then you're just sort of stretching all of that way too thin. So when we look at consolidating, if we need to keep it open in all outlets in all phases for the service of the residents, that is completely fine. But we'll present a model that says these are the days and opportunities to adjust the operations so that we can make sure we're maximizing really employee retention. I'm not saying, I don't know the staff here well enough to know that people will leave if they're only making $50 in tips and 20 hours, but if they're certainly depending on this as a full-time income, that is not bad. And the only way to affect that change is to, you don't want to cover that loss, but adjust the operation to make it work. And so we'll work on all of that. We started working on it. Greg did a lot of work on it. And we'll continue that with the new GM and then present that at upcoming meetings. But if anything, I see that coming down, the number coming down. So hopefully we have an estimated budget here for labor and food and beverage. And, if we exceed that, it'll be from revenue gains. And if we change the operation, obviously that labor number will go down for actuals. And I don't have anything else to review on my end. So I'm open for whatever discussion or greater detail or anything we need to jump into.
My little bag of tricks. Let's see. What else did I have? Something else.
That was my thing. Well, while Joe's looking, did you get a chance to, I sent Jamie an email about the increases on hamburger night and
Saw that.
he was unaware of it. Have you,
Yes. So thanks for bringing that up because I wouldn't want anybody in this community to think that my modest increases discussed at the last meeting were $5, $6. Yes, it appears that I don't have all of the background as to why, but it appears that our food and beverage team, Luciano, Kat, and Brian, met, consulted, and agreed to make those changes. I've tracked the email threads, I've tracked where the submissions came from. The only thing I don't have is the basis for the increase.
I mean, like the cost versus, yeah.
Sure. I mean, I have a prime rib buffet and mine's $39. It's not $48. But again, some of these things are where, that for me is identifying where I should be for that particular night of the week. And while we have the latitude to increase pricing and recover more COGS, I also have the latitude to not. So we have enough spread throughout that night. It's enough of a success that at that price point, look good. Would my chef love to get $42? I'm sure he would, but I'm the one that holds him accountable to COGS. And as long as our COGS are in line with budget and what our committees and boards approve, we're good.
Well, what's interesting about this, I had an email from somebody who was, either she was Burger Nut last night or she knew people who were, and they said the price had not gone up in terms of what they were charged. So it could be, the headline was different, but it didn't get effectuated in the system. So, or at least it didn't last night.
Yeah,
So,
what I
I'm
would
just
guess-
letting you know.
Interesting.
What I
So
would
it's
guess
still the old
happened
pricing?
is no
Apparently.
one implemented the changes.
Apparently not.
Okay.
Sounds like that so in other words, it may have been
So we,
old smoke and.
so we need to, what we need to figure that out is did people get chased away because of that? We don't know. So it's something that we should resolve quickly. I mean, however
What
you need
was
to
the
resolve it.
attendance?
Yeah,
I don't know. I'm going
Because, you
on.
know, I mean, and that
It
really
wa-
wasn't
it-
for you, it was, but regardless of that, it would be a good idea to go back and say, okay, let's make sure that is the right price.
That's what I'm working on.
That,
Yeah.
yeah.
And
that's-
then it's a good sense it didn't get implemented, you can say, oh, there was a typo, it's actually.
Yes, well, I wouldn't do that. I think it was well intentioned. Some of the feedback I got was that from either social committee or other committees, there were talk about events being too cheap. I have made comments about our costs being higher than they should be, and that's because of price point. So well intentioned. I had a bit of exchange with Brian over the past couple of days and just told him, every time you are thinking about a change in price or anything material that impacts the experience in a negative way, I need to know that.
Sure.
And that would be whether it's 50 cents or $1, because I can rationalize
There
all of
were
it.
40 people last night. From
That's
40
not bad.
burgers, which is not terrible.
Especially,
But
there's
it was-
nobody
but it was
here.
there's no one here,
But
there's no.
it was $15, so it was.
It wasn't,
It
yeah,
did
they didn't
not-
get,
it
yeah,
did
that's what I
not
was
charge
told, right.
Again, I don't have the COGS analysis in front of me of what that $15 night costs us, but we run those nights at my club. Now, we might use a different grade of patty, I don't know.
Patty's
But it is, we make money on the alcohol, but we don't do it to make money. So it's probably a food loser, 100%, because the staff that we have to bring in to push that out quickly is more than you would priced at $15, $16, $17. So I'm sure that an increase is necessary, but necessary is a loose term, right? If the budget says 55% food cost is acceptable, and that thing is at 55%, the need to increase it is kind of not there. But again, as I've said before, I do think that we need to examine 50-cent dollar increases wherever they should be grabbed, and they would be grabbed on those events that are completely underperforming.
Or is the size of it,
$4,
right,
$6, et cetera.
or is the size of it wrong? I mean,
Costs are going up significantly.
Yeah.
Costs are
You know,
going-
it's
Beef
burger.
costs are way up.
But also, everything's, but Jimmy, what I'd like you to do if you could is, so I went back to last year. Sometimes alcohol was $8 and it's now 13. Sometimes alcohol was 10 and it's still 10. I don't know why gin would go up $9, 70%, but scotch didn't move. If you could just.
Yeah, we can, so this.
When a new GM comes in, or
Sure.
F&B, or just go back, look at the historical, look where we are now, and just make sure that the decisions that were made, and I don't know where they were made, I didn't look to see the timing, I don't know if it was Vesta did it before they left, or, somebody at Hampton did it when they started, so I'm not saying who's responsible, I'm just going back to the beginning history of Jonas and to where we are now, and there's some massive discrepancies in pricing that just seem arbitrary, and I just want to make sure that where we are is where we should be, and if we're not where we should be, fix it up or down depending upon what's
Yeah, I probably
necessary.
wouldn't look at historical, what I do at my club and clubs in the past, we do a full market analysis. So any restaurants that my members frequent, whether they're mid-tier, upper tier, and clubs that will give us that data, not all clubs will, we put that in a spreadsheet and then we see where we rank. And it's shocking what we find sometimes. So we'll do the same thing. And if there is something that's $13 that should be $9, we would make it might not go to 9, it might go to 10, we would make that adjustment. Really, it should be industry average, market average, but I don't think that's what's been done here in the past.
Or price it so you hit the cost, price it so you hit the cog a little bit, either whichever.
Yeah,
whatever
I have
direction.
my guess is that it's gonna show that half of that list is too high and half is way too low. And then where do we land? Because I think, this price increase probably slipped through. Obviously, didn't get charged in Jonas. I think had we charged and anybody been paying attention, they rightfully would have complained. I would have complained about an increase that's that large. So we need to evaluate it. I would say generally, if the COGS and sort of the performance of the night say that Burger Night should be 19, to use that as an example, I personally don't feel comfortable jumping from 15 to 19. I would never do that at my own club. We would do it in gradual form. Sometimes you can reduce portion, I mean, you understand that, but in some cases, like on a fish fry, the cut of fish we're getting might come prepackaged in this portion and it's this big. And if you try to trim and change it, you're not really saving yourself anything, but you can change the portion, change the cut, change certain things. But if people love the burger now, I don't touch my burger in my club. It's like sacred. So if they love it here, we wouldn't mess with it. We just inch the price up to an appropriate level. But yeah, that was just a miss. I think, I don't know that Greg was involved in much of that because he was, kind of on his way out. And I'm sure he wouldn't have wanted to make that decision anyways. But Greg was always really good about throwing stuff to me that I should be aware of. So I think this was just a well-intentioned miss. And once I have the data, we'll reassess, reanalyze, and we have to send out an email that says, our apologies. Here is the new price.
Yeah, if we can get that out quicker,
Yeah,
just
we'll do
so
that.
so people realize, because like I said, could we have gotten 50, 60 people last night? I can't answer that,
Sure.
But I know I heard from about 15 people that said that they won't come. Did they show up last night? I don't know.
Understood.
I actually didn't have anything else. Thank you for that, Rich, because I found my Post-it note. I'm good.
Yeah, no.
This is good discussion.
Did anybody have anything else on any of the other worksheets or budgets?
I just wanted to ask Ken, if I did I understand correctly that the reserve number for the general fund is going to go down? Is that right?
That's what I saw too.
Yes.
Does it have to go down?
The reason I left it as recommended was because the River Club reserve was going up so much.
Yeah, fair enough.
So I was looking at it
Yeah,
holistically.
okay, fair enough. Yeah, that's a good point. I hadn't thought about it that way. Yeah.
I thought I hope I sent a reconciliation sheet out
You did,
on the reserves to people.
you did.
So the reserve study, the reason for the decrease was driven by lower pond erosion correction expenses and the impact of reclamite, which is basically pushing out some of our road paving replacement costs.
Right.
And then you can see the reserve for the River Club had a number of items impacting it.
Yeah, sure.
So
Okay.
I guess I felt overall, just trying to keep it balanced.
Fair enough.
The answer is no, it doesn't have to go down.
Okay.
You can raise one. The trouble we will run into by raising the general reserve and lowering the River Club assessment is in a few years, you hit zero reserve balance in the River Club.
Yeah, and I guess fundamentally I was thinking, is this the right approach, or do we at least, if we can say we kept it stable, that's not a bad message. The reducing it message is good for about 5 minutes.
Mm-hmm.
The reduction is nominal.
It is true, fair enough. What do you think?
If you want to increase it a little bit to make it flat, fine, but
What do you think, Ms. District Manager?
I think to Ken's point, I agree with him.
Okay,
I think it's a substantial increase on
Okay.
the
on the
River
River
Club side.
side, yeah.
So you're pretty much balancing it.
Fair enough.
You're reducing. the
Yeah,
River
okay,
Club.
I just wanted to ask the question, then I was wondering whether we were somehow constrained on the by what the reserve study showed. I wouldn't have thought that we would be, but I thought, let me just ask the question and not
Keep
say.
in mind, it's just a guideline.
Fair enough.
So it's a guideline, it's a tool for you, but
Yeah.
in the end, everything is always subject to change.
Yeah. Okay,
Yeah,
that was the only other
but
thing I
we've got a
had.
lot to catch up on the River Club side.
Oh, yeah. Yeah, birds.
So Ken, just
To
to
me,
be, just
to
to
me,
be
the
sure,
overall question, in looking at the summary, is the community is gonna, at this point, the community would see a roughly 6% increase in their tax bill.
That's, I think it's a little high.
Well, and it's been very flat for how many years?
It has been, I
It
think,
has been.
percentage-wise, yes, but I think dollar-wise, I think for, at least for trim purposes, because I don't disagree with you, I think you should never, some states have gotten themselves into trouble because, what's another $100? But,
And
I
here's,
think we need to be careful.
and here's the problem too. The people who have purchased a house recently are not taxed at the same, taxed on the purchase price versus the people who've been living for 20 years or purchased on that purchase price with the small little incremental inflationary markers. So if you lived in a house for 20 years versus somebody who bought now, you're not paying the same taxes.
Correct.
So
Well, you are for the ad valorem
for the applicant,
taxes.
The non-ad valorem,
Yeah,
we're paying
but
the
not-
same.
yeah, the non-ad
Yes,
valorem.
Yes.
Correct.
So-
Non-ad valorem pays the same.
Yeah, so
Yeah.
when you see this portion jump up big against that small amount of tax they're paying, it looks astronomical. When you put the $250, whatever it is, into what I'm paying, buying an expensive house, more recently, it's minimal.
Well, my argument though on that would be, I've also been paying into the reserves for the last however many years.
Yeah.
And I think an awful lot of people, because we can't ask for capital contribution, reserves contribution, an awful lot of people, were able to monetize the properties.
No,
And so,
no, I'm just
I think it
saying we
cuts
have-
both ways.
I'm just saying we have to look at all the
Fair
different
enough.
pieces because
I don't
it
disagree.
just affects different people differently.
Sure, no problem.
That was my
I get
point.
This number is, you also have to take a look at the different homes in the community as well.
Exactly.
That too.
This
Right.
$250 or $250 as a percentage is significantly more for some homes in this community than other
That's-
homes. And you have to
right.
take a look at it as a percentage basis, not necessarily the purchase price of it.
Yep.
I think that is much more important to take a look
But
at.
that's what I meant, the people, and I meant the smaller homes, so that's what I said, when I bought my home, which is a larger home, at the height of the market,
Yeah.
I'm paying, my rate is a high rate. The increase is minimal, but when you're looking at a $300,000 house for a person who's been here for a long time, that's a big jump.
That's a big jump
And
for people.
we just have to be cognizant of that
I
fact,
agree.
that there's different factions here, and there's still 40% of people, maybe not 50%, that have been here 10 years or longer still. I mean, I don't know that number anymore.
But this goes back to my conversation about,
Yeah.
optional services.
Yeah, no, I totally agree.
Yes,
And I'm trying to look at the balance of
Sure,
making sure that we fund the club to an appropriate level, to make sure that we're not doing things on the cheap,
right.
but also
Right.
making sure that we're not throwing money away or assessing people unnecessarily.
Yeah.
We need to be efficient, is basically what I'm saying.
yeah. More efficient than government is usually.
Operate a good club that people are happy to come to,
Right,
but do so as efficiently and reasonable as
Sure.
possible. So the people,
Yeah.
especially the people in the smaller houses, the less expensive houses who've been here for a long
Much harder
time,
for
are not
them.
necessarily burdened.
it's much harder for
so
them.
just food for thought, you still
We are
have,
getting older.
you still
as
have
a
plenty of
community
workshops.
And as facilities.
Yes.
I agree, Ken.
The demographics from the survey tell us that.
So you still have
Some
plenty
might
of
be getting younger,
workshops
but we're not.
from here to your final
Yeah.
public hearing,
Yeah.
where you can put this on your
Yeah.
on your workshop
Yeah.
agendas as many
Yeah.
times as you want.
Yeah.
You can continue to analyze your numbers, you can continue to analyze your details.
Yeah.
I would continue to closely monitor your financials. And as we get closer to the final public hearing, if you wanna hold another workshop, you can. It really is your decision, but you do
We
have,
can leave this open.
not this one we're closing out today.
Okay.
But we would have to do, another notice, which is fine, if it's just gonna be budget, but you do have your other workshops noticed, where you can put this on as an agenda
agenda
item, as ongoing, continuing discussions.
Okay.
Let's talk about process, because I wanna
Yes.
make
Yes,
sure everybody's,
please.
up to speed with the process, because we're a little bit behind. So, I'm gonna take what we have today, there's no changes today, right, Jamie?
No.
Okay, so there's 0 changes. So I'm gonna take what we have today and I'm gonna run with it, I'm gonna
Actually, I'm
update.
sorry, correction. Sounds like Carol will need to reallocate appropriately.
Utilities.
Utilities, yes.
Okay,
So Carol, if you're still on, could you make sure you send that respread to Belinda?
But that doesn't change.
But
your
that doesn't
bottom line.
change
It
anything.
won't change the bottom line. It'll change content.
For Total
on
River
the
Club,
consolidated, does it change at all on the consolidated?
No,
no.
consolidated
departmental
will roll
Yeah.
up, so, yeah.
Then they
The
don't-
departmental allocation.
Yeah.
Yeah, if it doesn't change on the consolidated, then we're fine.
Okay.
Meaning if I don't have to switch out from line
Right.
items, we're fine.
Okay.
So what I'm gonna do is I'm gonna go back, enter the April financial statement numbers, which will in turn, annualize the numbers. I'm not going to go back and forth with Hampton on the annualized actuals. At this point, I think we're running a little bit behind, and I don't think that making that change
No.
is going to make
Not
a huge
add to it.
difference.
Agreed.
If anybody wants to see their annualized numbers, they can probably request, their latest financials, because
Okay.
that is really on there, so I think that'll help. I'll finalize the packet, then, I'll send everything we'll have to print everything from our office tomorrow so that we can bring packets to Monday's meeting. That way we have it for audience members. I don't know how many audience members we're gonna have. Are we gonna have a big room for Monday, or we're expecting?
Yes.
My guess is there's
I
gonna
think
be a
there's
lot
gonna
of
be a
people.
big room, because the fitness people were turned away at the.
Well, you will, but I'm not sure how many of them are gonna be taking a budget package with them.
Yeah. I mean,
That I don't, especially if we, so here's a question for you then in terms of
Yeah, I mean, I
process.
typically bring like 30, 40 packets, but
It seems like a waste, and I wondered, is it productive for us as a board to just say, we've left that part, just so you know, because we recognize a lot of you were here for this item, it's left in place, and we are gonna continue to discuss it.
you can say it,
You don't have any issue with that?
no, you can say it as part of our
Okay.
discussion. I mean, again, this is your proposed budget, so I understand that a lot of people are gonna be very passionate about this budget because of the numbers, especially when they see the assessment worksheets. But it's proposed, it's not a final budget, so, there's still plenty of time for the board to make changes to this budget once
Fair enough.
we move forward.
So maybe what we do is we
So-
say something after public comment, or even before public comment.
So there will be
But
a
as far as
resolution
topics-
as part of Monday's agenda, there's a resolution to approve the proposed budget, we're gonna set the public hearings. Once you approve the budget at Monday's meeting, I then have to move forward, submit it to the county, once it's submitted to the county, then the clock starts ticking.
Right.
Okay.
Which means we'll have to, send out the
Right.
notices, submit the advertisements, there's a whole bunch of things that, have to be started and that we have to get moving on our end.
Mhm.
Okay?
Yep.
We did discuss, a notification being sent out to the community. We have done it in the past. The legal letter can be very confusing to a lot of people because when they read the terminology, because it's very legal wording, I wanna say, it's confusing. A lot of residents don't understand it and they think it's a brand new assessment and it's not. So in the past, Jill, you've prepared, I think it was part of the newsletter at one point too, just a summary for the residents, just informing them of what this is and, giving them a breakdown of what, the board is proposing and inviting people to come to the public hearings. I think that would be very beneficial because it has helped for people to understand. Because what'll happen is we will be bombarded with phone calls with about, I would say 500 to 600 people calling us, this is a new assessment, why another assessment? And it's not a new assessment, it's just people don't understand the terminology.
Can you remind me, when we've done it in the past, because I'm not sure we did it last year, my memory of last year is useless anyway, but was that done on the trim budget or the draft proposed?
It was done the draft proposed,
Yeah,
so
not
with trim, once the trim is
okay.
gonna go out regardless, because
Okay.
Sarasota does require trim.
Right,
So as we got closer to the public hearings, the letter/newsletter was sent out with the breakdown.
and I think we had made some changes between trim, or maybe we hadn't, but there had been another version that was a preparation for the hearings. But I could be misremembering.
I don't think we made
No.
changes at that point, I
Maybe
just
not.
think that there was some sort of an explanation,
Okay.
because I think it was a little more complicated in the prior year because of the hurricane assessment.
Mhm.
2 years ago. Yeah.
Yes.
So when we had the hurricane assessment, it really did help send out the notification, because a lot of people did get a reimbursement for the hurricane assessment.
Yeah.
And we were able to help several of the residents get that reimbursement, so
Right.
it was very different. This,
This last year, I don't think we sent one.
We didn't,
Yeah, no.
no,
no, we
we
didn't.
did not, and I think it was because, how much was the increase this past year?
It was
I think it
minimal, like
was very
90
minimal.
bucks.
Let me do the following. I'm gonna pull out the last time we did one, and I'll provide a copy to you all. Can I email that?
Yeah.
For Monday, so we can just look at it,
Mm-hmm.
and, maybe we can, simplify it, maybe is the word I would use.
Because in prior years, prior to it being emailed, I found that it was more productive rather than it being mailed, for it to be sent via email.
Mhm.
Because a lot of people did not read the correspondence that was attached to the letters.
Right,
So I think email was a better way
Mhm.
of sending the letter
Yeah.
out to residents.
And I do agree with Rich. There's been a lot of backlash about people saying that we've been sneaky and stuff like that. So I think at some level, we do need to clarify that this is just our process and the timing of our
And
process.
we're not in control of it.
And we're not in any control of it. Yeah, this was not anything like that. So,
This is all state
State-driven,
State and
right?
county driven.
Well, I have to say, as a board, we do a lot
You and I
for
talked about that.
communication, and I have expressed this to several board members. You broadcast your meetings on YouTube. You send out my meeting summary, which nobody really does. The meetings are recorded, there's audio recordings that are available if need be. You do provide a lot of communication to the community.
And then the minutes on
And
the
the minutes
agendas.
are on the agendas are posted on the website. There is a lot of communication that is sent. I just had one board member ask me, because they're interested in doing something to provide communication, and I said, well, go on YouTube, Venetian, look at what their board does, because this is the best reference source. I really can't speak enough about what you guys do, because you provide a lot of information to the community. And it's just, a lot of people just don't log on, they don't attend the meetings,
yeah, I have sent the VenetianCDD.org website to so many people.
Yeah.
Here it all is. We're not hiding anything.
Yeah, exactly.
I mean, though, and I try to put as much information, I don't
Yeah,
do
it's all
that,
out there.
I don't do that summary the way I do it here for any other district.
Wow,
So, and
thank you.
it's a
Yeah,
lot,
thank
it's
you.
a lot of work, but you provide a lot of information to the residents, so I understand that there's confusion, and it's just, a lot of people just don't read the information.
But also, I mean, and even if they did read it, they also don't understand that we have to do it now, so that.
One thing I will
Yeah.
say that I have found in a lot of communities is that some homeowners associations and master associations, they send out a lot of communications about events and about things. So some residents get tired of getting so many emails. So what they do is they just tone it out, and they don't really read the
Right.
emails anymore. So that's why they miss a lot of the communications, and they don't really log on, and they don't really view things. It really does happen, and it's a shame, but it's a real thing nowadays.
Well, and I think the other problem is for snowbirds, I know many people who have no clue what we do.
Yeah.
And no clue what goes on here until one little thing affects them.
Correct.
And then they get upset and they're trying to figure it out and they don't really understand it. And they really don't want to understand it. They just want you to fix it.
Or people that have been in for 10 years still don't know what the POA or the CDD do.
Oh, people who lived for 20 years still don't.
Yeah.
I mean, that continues to be a problem.
Exactly. Joe, according to, and Belinda can back this up, but just a reminder, if the meeting on Monday gets out of hand with, you're allowed to consolidate all of those
Yeah.
people
Oh,
into
yeah.
one
Yeah.
spokesperson. Because I remember when the pickleball people came in, talking about how much they love pickleball, it was a 20,
Yeah.
6 people sat there, all thank you.
Yeah, we
good point.
did.
And I'm sitting there
We
going,
did.
oh my, because I was in the audience, going, I can't imagine what you guys are thinking.
Yeah.
And here's my preemptive apology for that.
Yeah.
But
Well, you kind of told them to do that at the workshop. You let 1 or 2 people speak. Because you
Somebody
let
asked a couple
somebody-
of questions,
Yeah,
but I
yeah,
did
yeah.
tell them they could come. And this is where, I think,
You encourage them to have a spokesperson.
I think what we could do is, we'll tell people to sign up, and if we have more than, 10 or 15 people, I think we're gonna say, we're just gonna need to limit it.
yeah, because the message is gonna be the same. It's either gonna be pro or con.
Sorry, guys, you
Belinda.
can't. If you
You
have,
can't.
if you have 45 people show up and they want to give public
I
comment,
thought I've read under the assumption you're allowed to consolidate to 1 or 2 spokespeople if they're all happy, if the message is
well,
similar.
if they want to give a public comment, they don't have to tell you what their public comment is. If they want to come in and say, I want to give my public comment, I want my 3 minutes, you have to give them their 3 minutes.
I thought you
I
could
thought
limit it to less time. I thought 3 minutes is suggested.
I have to go into your rules of procedure to see if it states 3 minutes.
It doesn't say required, because I looked at the rules of
Okay.
procedure fairly recently.
So
I'll
I
check it
would-
again.
I would double check and I would confer with Andy, but you
Okay.
do need to give them their public comment time. You can't just say, well.
So we could limit it if it's not written specifically.
If
that
it's not
3
written
minutes.
specifically, but I would suggest if you have given 3 minutes and it has always been your procedure, that you give everybody your 3
I agree
minutes.
with Belinda, because it's
Okay.
dangerous, because we're already getting comments that we're doing this in off-season on purpose.
Yeah,
And people aren't gonna understand why, and they won't listen necessarily.
yeah.
So then if we cut down their speaking time, I think that's dangerous. I think we need to just let it play out.
Yeah,
what
just,
we do.
but if there are 20 people here, we're gonna be here for an hour
Yeah.
or 2, and we're not gonna get anything,
We need to be more efficient in
We
our
still have to
meeting.
get stuff done.
We do.
Are we having a workshop at 8:30?
I didn't see it.
It went out.
It
Well,
did go out? Okay,
For a
good.
workshop?
you
A workshop?
always have a workshop scheduled.
Then
Okay.
let's be very efficient in the workshop
Yes.
about, so that we
Yeah.
can make the business part of the meeting.
Yeah, go. Yeah, it works for me. I've already
And
figured
that
out
way
which
people still have
things.
time to comment, which I do think is important.
Yeah,
I mean,
fair enough. No, I think you make a good point. So,
You're-
all right, good. So, I was looking at.
And I'll make sure we have the big room set up. I'll get with staff here and make sure that that happens. We haven't been in the big room for a long time.
Have nothing in the big room.
Probably the last time was pickleball. Oh, that was because it was landscape.
It says that,
Oh, landscaping was the last
At
one,
least
because we were.
at least according to AI, Sunshine Law, Florida statute 286-0114, you can't ban citizens from speaking, but a board or commission can adopt reasonable rules limiting the total number of speakers.
That's where Belinda says
That's
our
where
rules
Belinda
of
says, yeah.
procedure.
Consolidating public input
I'll
into a
check.
single spokesperson is legal,
I'll
single
check rules of
spokesperson
procedure.
is legally permissible.
I've got them.
Yeah.
I'll check the rules of procedure.
I'm
And maybe I'll even.
I'm looking, I'm in them, hold on.
It says it's 286-0114.
Yeah, but the rules of procedure are our own
Oh.
They're
adopted
not
document
board
for
commissioners.
Venetian.
Yeah, and your rules of procedure are adopted via resolution, so.
I've never seen anything that we had a mandatory, we met at one.
No, I think it says either suggested or something. It's not an absolute verbiage that I recall, I could be wrong. I don't trust anything that's in my memory anymore. As they say.
And it's like, not that I'm looking to have people not speak, it's just that to hear the same thing. I mean, we do have business to get done. And we're paying professionals to sit here and through all this as well.
Yeah.
I know, but I care about that.
Oh, I know you do. Oh, I know. I know it's too bad I don't have my iPad here because it's on my iPad highlighted.
Well, I do know that there are residents that will not come to this meeting that are in agreement with the fees simply because they don't want to hear the backlash.
Yeah.
They don't want the backlash, so that's good.
And that's not right.
It's not right, but
And I've had people call me at home actually to tell me their feelings, and they've been, the ones who have called have been in favor. The ones who have written have not been in favor.
Right.
That kind of seems to be the thing.
Well,
That's the
yeah, yeah,
I
and
get the same thing.
yeah.
I've talked to dozens of people that said, yes, this is the right thing to do, yes.
I'd say that the board shall set aside a reasonable amount of time at each meeting for public comment. A portion of the meeting reserved for audience comment shall be identified in the agenda, which we do always identify in the agenda 3 minutes.
Okay, all right, then.
It says,
That's
and
the
it is
standard.
identified as 3
It
minutes.
is, so that's the standard.
Okay.
We have to stick
It says at the chairperson's discretion or at the discretion of the vice president or board member appointed pursuant to Rule 1.1 each person wishing to address the board may be subject to a 3-minute time limit for comments in the interest for time and fairness to other speakers. So the 3-minute time limit is in the informational page in the agenda packet, which is page 2, I want to say.
Yeah.
Okay.
Yeah. So, all right, fair enough. Okay, we get it.
All right, so if there's nothing else,
No.
we are gonna need to adjourn this budget workshop.
I'll make the motion.
There's a motion by Jill,
Second.
second by Cheryl. All in favor?
Aye.
All right, budget workshop adjourned at 11:48 a.m.
So 9:45 golf course tomorrow.
Yep, I'm gonna swing by and keep
Okay, sounds like a plan.
party on. Party on.